What up, everybody? It's Lonnie here. Charts and Labs. I'm going to jump into a chart this time. My last video was more based on market sentiment and a lot of the naysayers that were popping up and using ChatGPT half-heartedly to spread some FUD and create some uncertainty. So this video we're going to just purely look at just the charts and see what's going on in the world of TXC. First thing is a reminder, obviously I'm not a financial advisor, I'm not a financial guru. These are just my opinions and me sharing what I'm seeing in the market of TXC, as well as kind of some outside influences that have kind of pushed this market. So what we see on the chart here, I plotted the white lines are the path to 16 points that we've seen. The 194, it was technically 195, was August. The 275 was September. 379 is October's, and I think it was 529, but 530 was November's. So if we zoom out a little bit, not gonna be able to get much before we see the crazy spike on Bitmart. This yellow line is kind of the natural linear direction if the price just kind of was very mellow, no macro, no big event, no exponential growth, and was just kind of a steady builder. So we can see that there's a slight incline, meaning that price is generally going to go up in this direction, and price has not broken below that. This red line is kind of some larger wicks up as price was starting to kind of get into a discovery mode. And this was kind of just a general trend because it respected it on multiple points. It even respected it on the downside before this breakup here. And then even when we came back down, we found it again, and it was trying to reestablish this as a trend before ultimately structure breaking and falling here again. So as we kind of zoom in on this, this is the 4-hour chart. You know, as you're looking at inputs and you're seeing volumes and you're seeing, you know, chart movements and direction, buys and sells, you kind of want to follow it and see the patterns and such. But you have to take into account that there are macro events that come in that affect them, can affect and overseed what is considered a normal move or a structurally sound move. So one thing that happened in August, September was a promo event where if you met a certain amount of sales in the affiliate program, you saw a bonus in regards of TXC. And what this created was a forced buyback essentially for TXC to go into the market and buy its own TXC, own coins to fulfill the order. It was a very, very successful promotion and probably bigger than they expected. So they didn't have enough TXC to do the promo, so they had to go into the market and buy some. So that created this overly exaggerated move up that wasn't a technical breakout, it wasn't any kind of big buy, and it wasn't organic, and it was straight up, which led to it coming straight down and created a lot of, you know, this move was just in a price discovery zone of where will buyers come back. Whales, there was probably some whales who took advantage of this, who did have some coins and sold and created that downward pressure, downward algo, as the natural flow of the market didn't create any of this move. So now I had to come back and discover where is the natural sentiment of the price value. Where does the market see this valued? And this was a guided move up. This wasn't a move up, come down, move up, come down, move up, come down like this. This is a very organic chart. This is an organic, structurally sound move, not guided, not overly mechanical. And this was guided by the fact that there was low action and low activity. Not a lot of exchanges had TXC listed, so very few traders outside of the smaller community. community really ramped up in September. It was the big sales month, and the excitement was around that. So even October had plenty of good sales, but was slower than October. November it significantly slowed down, and that took out a lot of the liquidity that was able to help build the market. TXC being a proof of work mined from zero coin means that there was zero coins to start in this market, so they have to be drawn in by adding liquidity, adding the cash to bring in those people to sell the coins to the market to create a circulating supply. So it's kind of a give and take. Hey, sell us your coins so we could get them in the market so other people can buy them. So there's liquidity that TXC has, that's in the store of value in Bitcoin, Ethereum, gold and silver, and some real estate. And that is to kind of back up the security of the project as it grows. Kind of like if you were to own a house and then you go and you get like a HELOC against it, you have to have more in the store of value, and then you use less in a more fluid state to use. So the fluid liquidity, that's the cash that's put into the market, is less than the liquidity staked in the store of value, but that liquidity was used to entice sales to get this circulating supply, and then to help the buyers establish a price and not let the sellers just overrun it down like this. That's where that liquidity would come in and push until buyers kind of balanced out the order flow, and then you could step back and not have to force in the liquidity. So, if we look even from these points, even though this was during a kind of an unnatural market, non-organic move, we still see that this plot of these large wicks that became points of interest transfer over, and now we're in that region now. These ones were resistant at this top and kind of established that true downtrend, because even in this late October nudge up, that was a push to try to see the November price a little bit early to try to get back some of this excitement, and because the liquidity was there, the cash liquidity was there to see and kind of test the market. Not to create the market, but to support and test and see if the buyers believed. And what we found out from this price range, being that this was very tight knitted and only at these prices if liquidity was being added and supported, was that the market didn't support that. So that's where we see this failure. The first failure comes and tests right here, and as you can see on my crosshairs, when I do this one, I'll have to change the color, but we failed in the first bounce here, right, where we kind of got some wick action. I'm gonna make this one make it be purple. So you see how we wick here. I'm gonna zoom in a little bit because we're getting into some specifics, but this lines up with this wick here. So we can see that multiple touches and multiple draws is confirmation that these are points of interest, that these are going to be important price zones, both as resistance on the way up and support on the way down. Which is why as it lost that and accelerated to that back to the October liquidity zone, which isn't a true technical support zone, it is a mechanical liquidity pegged or nudged price, I guess. And so bounced there. They quickly tried to reattempt this zone, but we see that it failed to get above. Again, these lines are not like lines in the sand. You got to think that there's a little bit of a cushion on both sides of them. And that's where that price failure kind of happened. So then we also see that at the 399 level, as it was trying to get back over 4, that $4 hurdle was not, there was no buyer support, and you can't see the volume on the 4-hour chart. You have to go to the 24-hour and zoom in, and we can see that the selling just really turned up and overtook the market here, and then this failure was accelerated a lot because of a lack of buying. This was very small volume, back to where even back in these days, before that run up and before any of the October moves happened, this volume fell back to that level. So instead of this volume growing as the community grew and more and more people got active, it's still very small. And that's because on these exchanges that you see, Dextrade has been the one since the beginning. Um, Tier 3 exchange, not a direct funded one. You have to do some hoops and some transfers to get funds over there. And then Bitmart. Bitmart was in January of this year, so this one's kind of the longest running. Mexi, Biconomy, Pionex, XT, all came in, one of them came in August, one came in September, and then two of them came in October. So if you look back at that timeline, and we can see that that's where the volume really picked up. And if we look before that, besides the spike of when Bitmart went crazy on its little algo reign, that kind of pre-August move in this range, this was kind of the trend that we were seeing, where price was pretty mellow, and we're looking at $25,000 in volume a day is just tiny, and but the price was also tiny. So $26,000 in volume on an 84-cent coin is 30,000 coins, and yeah, and now we're over here, and we're trading at in these lower volume days, 300,000 at $3, so that's only 100,000 coins. So the amount of coins in circulation only tripled in five or 6 months, which based on the amount of people who came onto the mining project didn't match up. So there's very few people who are actively in this market trading it and investing in it compared to the amount that are buying. And that's totally fine. The project itself is a mining project, so it makes sense that the miners are outpacing the people who are investing in it. The nice thing is now that you're seeing a lot more exchanges being active, and that daily mining distribution is starting to get smaller to the point where, $25, $30 is getting you more than, it's getting you about a month's worth of mining for just $25 or $30. There's more people coming in to supplement their mining income with investing income, which is now creating a much more organic market instead of I don't want to say like a faux market, but it was a mechanical market that was being created, and it was in a controlled environment, which was healthy for the time, and the project's outgrown that. And now that we're seeing a lot more eyes are getting on this project, which is why you're seeing some people come on that are skeptics and are not fans, and that's totally fine. Not every project is for everybody. And if you look into it and you do your own research and you see this project is fitting, and you see the value that can come from all that it's bringing to the table, and mining coins is very cool for that passive income for long term. It's not a get rich quick. It's not a meme pump kind of coin. So it's got to fit your investment style. But the utilities that are coming in, if this layer 2 rolls out and the downtown digital dollars take off, there's a lot of upside potential in this program, and I think that's where you're seeing everybody kind of step in now. So now that we've kind of trended through and we bounced out of this point, and now we're in this inflection point, we're seeing that upward pressure building. Buyers are stepping in. More people are aware of the value of investing in it and buying this coin on the exchanges to build your holding of it, because as layer 2 wraps up the utility and the utilization, that demand flow will kick in, and if you want to get on, it's a lot easier to catch the train while it's parked before it's running. So do your research, and never invest more than you were willing to lose. Early projects like this project's only been around for like 22 months or so. The earlier you're onto it, the more risk that's involved. And the mining project of this project is only 22% sold. So you're not even halfway. There's plenty of opportunity to get on. You haven't missed out yet, but you're gonna see the ride up and down, especially as there's price discovery of where are the buyers and where are the sellers. We're going to see the points of interest where sellers are going to outpace the buyers until buyers step in and realize that they see the value, and that's going to come as layer 2 and other phases of this project rollout, creating that value and that excitement for not what it is now, but for what it's going to be in the future. So hope everybody is making money out there, whether it be this project or the project that you like. If you have a project you want me to take a peek at and look at and plot some of these charts and trend lines to see if I see what you see, feel free to throw me a suggestion. Until then, catch you guys on the next one.